Welcome to today's market analysis for August 12th, 2025. Buckle up. Buckle up. Investors, because we've got a roller coaster of candlestick signals to unpack. The U.S. equity markets just hit all-time highs, and we're seeing some fascinating patterns emerge. Ready to dive in? Let's go. The S&P 500 and Nasdaq closed at record levels today, riding a wave of investor optimism. What's driving this surge? Well, cooling inflation data and growing expectations for Federal Reserve rate cuts have set the stage for a remarkable rally. But that's just the tip of the iceberg. Let's break down the sectors and stocks that are making waves. First up, the technology sector. This powerhouse led the charge last week with an astounding 8% gain, translating to a market capitalization change of $57 billion. Software and IT services were the stars of the show, each posting increases of around 8%. Not to be outdone, hardware and storage clocked in with a weekly return of approximately 7%. But here's where it gets really interesting. The sector formed a bullish continuation candlestick pattern. This is a clear signal that the current uptrend is likely to persist, with buyers firmly in control and pushing prices higher. Keep your eyes on tech stocks, folks. We could be seeing new highs in the near future. Moving on to the basic materials sector, we observed moderate but noteworthy growth. Selected materials stock leaders like Newmont and Agnico Eagle Mines posted strong gains, contributing to an overall sector increase of 3.8%. That's a market capitalization change of $28 billion. Not too shabby. A bullish engulfing pattern formed on Wednesday, suggesting a potential reversal of the previous downtrend. This is definitely a sector to watch closely in the coming days. Now let's zoom out and look at the broader market snapshot. The rally we're seeing is being fueled by continued strength in mega-cap tech, industrials, and AI sectors. Industrials remain the top-performing sector year-to-date with a 16.1% gain. But tech is hot on its heels, outperforming in July with a 13.7% year-to-date increase. It's worth noting that defensive sectors like utilities are lagging behind, while small caps are rallying, but still trailing their larger peers. The good news? Market breadth is improving as more sectors join the party. Let's dive into the candlestick structures we're seeing across leading indices and high-cap stocks. Bullish engulfing patterns are popping up on several large-cap names, indicating robust buying pressure that's reversing earlier weakness. We're also spotting doji and Morningstar formations, signaled indecision followed by confirmed bullish momentum, often a sign of market inflection points. Mat hold and rising three methods patterns are confirming strong upward trends, especially in tech and industrial shares. Keep an eye out for inside bars, which are occurring within consolidation phases and could signal minute breakouts as volatility contracts before decisive moves. From a technical interpretation standpoint, bullish reversal patterns like the Morningstar, bullish engulfing, and piercing pattern are prevalent near previous support zones in major indices. These are providing credible signals for trend reversals. Continuation patterns such as the rising three methods and mat hold are strengthening the case for ongoing rallies, particularly in high-growth sectors. It's worth noting that bearish patterns like the hanging man and shooting star are rare today, reflecting persistent upside momentum. However, a degree of caution is warranted, as these could foreshadow short-term pullbacks in overextended stocks. Let's break down some sector and stock highlights. In the technology sector, we're seeing bullish engulfing and mat hold patterns. NVIDIA, NVDA, is surging post-AI chip news, with inside bar breakouts catching traders' attention. The industrials sector is showing rising three methods patterns, with CSX and Boeing displaying strong continuation signals amid year-to-date outperformance. In the consumer sector, Morningstar and doji patterns are forming on stocks like Amazon and McDonald's, setting up potential reversal plays after minor corrections. Utilities are lagging, with Southern companies showing spinning top and inside bars, patterns that reflect indecision. Small caps are attempting a recovery, highlighted by bullish engulfing and Morningstar patterns on the Russell 2000 ETF. It's important to note that large cap stocks are dominating market cap gains, with 5 mega-cap companies, including NVIDIA, accounting for most capitalization increases in recent weeks. Now, let's talk sentiment and outlook. Investor sentiment is strongly bullish, with retail investors continuing to fuel rallies, particularly in AI and tech-driven names. Despite stretched valuations in growth stocks, the technical outlook remains upbeat, backed by robust candlestick confirmations. Professional investors are maintaining cautious optimism, aware of risks from policy uncertainty and geopolitical developments. However, the fear of missing out is keeping institutional money on the sidelines, giving agile retail traders an advantage in spotting and riding technical signals. To summarize the key patterns we're seeing today: bullish. Engulfing signals are appearing with high frequency in technology and small caps. Morningstar patterns are moderately present in consumer and energy sectors. Doji and spinning top formations are showing up in utilities and financials, indicating indecision. Rising three methods patterns are prevalent in industrials and tech, while inside bar patterns are common in tech, industrials, and select ETFs. Hanging man patterns, which could signal bearish reversals, are low in frequency, but worth watching on a few megacaps at record highs. As we wrap up today's analysis, it's clear that candlestick patterns continue to provide valuable insights into market dynamics. The bullish engulfing and continuation patterns across megacap tech and industrials underscore broad-based momentum. Morningstar and doji formations in consumer and utility sectors signal shifting sentiments, likely foreshadowing the next waves of rotation or consolidation. Overall, technical signals point to a sustained uptrend, with periodic sideways movement as markets digest macro news. Looking ahead, traders should stay vigilant for reversal clues as the market approaches overbought territory. However, for now, the path of least resistance appears to be upward. Keep an eye on those candlestick patterns, stay informed about sector rotations, and remember that in the ever-changing world of finance, knowledge is power. That's all for today's market analysis. Remember, while technical analysis can provide valuable insights, it's always important to consider fundamental factors and manage your risk appropriately. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.